to moderate to 4.2% by 2024. Joining me now to discuss the outlook for the region with a focus on India is IMF's Krishna Srinivasan, Director of the Asia and Pacific Department. Krishna, thanks very much for your time here on CNBC-TV18. If I could start by asking you how you see the impact of the latest crisis that is unfolding in the Israel-Gaza region for Asia and the Pacific region, and more specifically for India, what will the best and worst case scenario look like?
Thank you, Payami. So I think we are still looking at the impact of recent conflict. Let me begin by saying we're very sorry for the loss of life. It's very tragic. But again, on the economic impact, we need some time. One channel through which the region might be affected is through increase in oil prices. And here the answer is that what we've done at a global level is for a 10% increase in oil prices, global GDP comes down by 0.15% the following year, and inflation goes up by 0.4 percentage points. Now, of course, this is a global estimate. The numbers could vary for Asia, and in particular, inflation numbers could be higher for Asia because India, largely it's an oil importing region. And in terms of the worst case and best case scenarios, if oil prices rise up very sharply, that could mean significant impact to the region in terms of inflation, in terms of current accounts widening. The best case scenario is the conflict is short-lived and prices don't move that much. That would be good for the whole region.
All right. The IMF report says that together China and India could contribute about half of the world's total growth in 2023 and 2024. But with China facing the headwinds that it is facing and India remaining the fastest growing economy, how will this play out over the medium term? Do you expect China's contribution to start to decline and India's increase over a period of time?
Actually, we do have. So India's contribution to global growth this year is about 16%, and we see that number going to 18% over the next 5 years. Now, China's growth is still going to be higher than global growth, so its contribution is likely to increase. But as India grows more rapidly, its share will increase. The question is of course, people say is, when can we reach the same level of contribution as China? You can't give a time frame to it. It's important that we keep growing at a rapid pace, continue with the reforms, so that at some point in time, that share is much higher than where it is right now. But just between the two countries, it's 50%. All of the rest of Asia put together is about 70%. Again, that speaks to the dynamism of this region.
As interest rates remain higher for longer, what are the associated risks when it comes to the asset quality or the financial sector stresses that could emerge for countries like India?
So again, the one thing which to note is Asia's share of global debt has gone up from 25% before the global financial crisis to now 40%. Now, this is total debt I'm talking about. It's public debt, corporate debt, and household debt. And the impact of higher rates is going to vary across countries depending on which balance sheet is bigger, right? So, in general, higher for longer implies that borrowing costs are going to be higher, debt servicing is going to be higher, and so the impact on countries which have high debt is going to be that much more onerous. Now, clearly, in the case of also a higher for long implies that there could be impact to the financial sector balance sheets. In the case of India, NPLs have come down. Capital buffers and liquidity buffers are pretty strong. So we are in a sweet spot in many ways. However, as interest rates continue to rise and remain for longer, you could see tensions on the ability of corporates and households to pay their debt down, and that could have implications for the financial sector. So right now we are in a relatively good spot, but we have to be very careful and monitor these developments as interest rates rise and remain high for long.
In the same vein, interest rates in US, for instance, they're around 5%, and if that remains the case for the next year or so, what happens to the risk-taking and business sentiment, for emerging markets, specifically for India?
So again, if interest rates remain high in the US, what does it mean for us? So for India, you could see that, again, borrowing costs could rise. if the interest rate differential between US and India is large, then you could see the currency depreciating more, and that could again implies higher financial costs. So with interest rates remaining high for long in advanced countries, it has a bearing on borrowing costs for countries in the region. It has implications for currency movements depending on how interest rates in our countries move, and all that has to be factored in a more holistic way to see what's the overall impact on the macro.
You know, widely trade, of course, is considered good for growth of economies, but what we're seeing now is rising geopolitical tensions, sanctions, protectionism, friendshoring and whatnot. How is this going to play out for India, you think?
I think this is a very important issue to consider. In our most recent Economic Outlook, we've talked about the rising risks of fragmentation. The word often used is de-risking, like you said, friendshoring and reshoring. And we've done some estimates for the region. And what we find is that whether it's friendshoring or reshoring, global output takes a hit in both scenarios. Why? Because trade is being withdrawn. In the case of friendshoring, countries start trading more with their alliance partners. In the case of reshoring, everybody is more inward-looking. In either case, world GDP comes down. In the case of friendshoring, global GDP comes down by 1.5%. In the case of reshoring, where the impact is much more significant, global GDP comes down by 4.5%. So whether we look at one aspect of de-risking or the other, the fact is everyone hurts. In the short term, to be clear, in the short term, some countries could benefit from trade diversion because trade comes towards them. However, over the long run, because of what happens to global, to GDP in the US, GDP in China, overall demand comes down, and so that hurts everybody. So again, this is a risk which we have to mitigate. Everybody has to work towards it and to make sure that the risks of fragmentation don't fully materialize.
That is a big risk indeed. But you know, this China plus one strategy again, do you think it's going to significantly benefit India in any way? Is it necessarily advantage India? Because, you know, there has to be interest from global corporates to manufacture here.
That's a very good question. I mean, one thing we have to understand is that these global supply chains are well established. So any fundamental change will take some time, right? At the same time, the question is, are we seeing any signs of changes in global supply chains? And if you look at data on trade and investment, you do see some signs, right? You do see some trade going towards other countries. You are seeing investment going into other countries. So this is something which will, if you want to see a fundamental shift, it'll take for a long time. But in the near term, you could see gradual shift, which is what we are seeing. But for countries to benefit from this, they have to go in terms of deepening reforms, which can make the country attractive for both investment and for trade.
You know, speaking of reforms, a big push to make in India has come from a mix of production-linked incentive schemes that the government has introduced here, and it's also accompanied by restrictions on imports, like we saw in the case of laptops very recently. Your thoughts on this strategy that India is adopting?
So the production-linked schemes, I think it's too early to make an assessment of how useful they have been in terms of getting investment, in terms of generating jobs. I think it's too early to call that. But I would say that in terms of, one area where India has shown really brightly is the whole issue of digitalization. You know, digital public infrastructure, the use of internet, the use of digital technology, and so on. So given that, the impressive strides India has made in that context, limiting the import of laptops and IT equipment is not the right way to go. So I think one area of reform for India also is on trade liberalization. There have been some recent curbs on exports, some recent curbs on imports. If you want to reach your potential, I think we have to move much more on eliminating some of these trade restrictions. Yes, there are domestic compulsions. Sorry, go ahead.
I was just saying, if you put all of this together in this new global order where, the supply chain, all of that is getting reset, do you think India is winning in the race to get a piece of this global supply chain?
So what I would say to you is India is well positioned to benefit from this. Why do I say that? If you look at India's fundamentals in terms of growth, in terms of inflation coming down. They have been fiscally responsible. If you look at important reforms which have been undertaken in terms of digitalization, infrastructure, and so on, I think India is doing well, is well placed. However, that does not mean there's an empty set of reforms out there. I think there's a lot of structural reforms which India needs to do in terms of both continuing improving infrastructure. I talked about trade liberalization. There's need to do more on labor reforms, land reform, agricultural reforms, improving the business environment. So you have to think of these reforms as a comprehensive package aimed at attracting both investors and to attracting trade partners. So yes, India is in a good spot in terms of macro fundamentals, but reforms continue to deepen for India to reach its great potential.
And finally, this India-UK free trade agreement that is in the works, what sort of potential benefits can it really lead to for India, with many of our exports to UK already enjoying low or even zero tariffs in some case? Can it, do you think, do to India's textile apparel sector what it did for Bangladesh, for instance?
So I think in general, what I would say is we need to respect multilateral trading platforms, go through, make reforms, including the context of the WTO and so on. But I think India has chosen to intensify trade relations with countries. They have a deal with Australia, with UAE, and now with the UK. Any kind of trade integration is better than no integration. So in that sense, you are going to see some benefits from this. And hopefully, when we do this, then you will see that the importance of integrating not just with one or two countries, but more generally. Right now, there's a risk that we have a spaghetti bowl of trade agreements. Are they internally consistent? We have to see that. But one would hope that with great integration, India will benefit from the deal with the UK.
Well, on that note, Krishna, thanks very much for sharing your thoughts here and for your time here on CNBC-TV18. Thank you.
Thank you.